Hi, this is Kerry Artak with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF small cap index, essentially for the week of Monday, August 8th, 2022. Actually, this was put out on YouTube on Tuesday, August 9th. We are resuming the DIA and IWM on a weekly basis for the indefinite future for free on YouTube, on the Wicked Stocks YouTube channel. Just a reminder that wickedstocks.com, the paid service, provides weekly analysis in the S&P 500, the NASDAQ 100, U.S. Treasury ETF, usually the TLT. We also do daily analysis in the SPY, the S&P 500 Spider ETF daily analysis, and daily analysis, video analysis in the Triple Q, the daily Triple Q report, that is the NASDAQ 100 ETF. And we do 2 premium private stock pick videos every week, all for a very reasonable price. You may want to check that out on wickedstocks.com. Let's move to the charts here for the IWM. Just kind of backtracking a bit. We missed a few weeks with the IWM because we discontinued it on wickedstocks.com and replaced it with the S&P 500 and the NASDAQ 100 index analysis. 164.16 long-term 3/8 downside Fibonacci, AB. A is that 2009 financial crisis low. After all the bloodletting was over, that was the low. And then we continued sort of meandering our way up in a very meaningful way. And in fact, in a very meaningful way following that COVID low of March 2020. So B is the actual move high from late last year. 164.16 held the market, as did a rising 2/3 speed line projected off that March 2020 low. If you've been following the weekly IWM report on wickedstocks.com, you recall this as an area that I'd mentioned could contain quarterly, possibly annual selling pressures. In the Triple Q and the NASDAQ 100, same rising 2/3 speed line performed just as beautifully in holding, so far, longer-term selling pressures. And the rally, very similar. So here we are. We've come off of long-term support that is still below the market, changing a little bit every day with regard to that 2/3 speed line this week at 167.91. So it's a range of support from 167.91 down to 164.16. I don't envision another significant down leg into later year unless we were to violate this lower area. Until then, let's zoom in a bit and show you the same exact structures on the weekly chart. It's all weekly charts, by the way, weekly bar charts. So I've zoomed in so you can see that March 2020 COVID low and the fact that we are presently testing meaningful channel resistance. That was an objective off of that 167.91 and 164.16 area, 2 to 3 month target that's been realized inside of 2 to 3 months, inside of 2 months actually. 194.57, significant overhead resistance. Also a significant upside pivot point, continuation point into later year. If we're unable to settle above that this week, there's a very strong case to be made that the market may be putting out a near to midterm high and over the next month or two fall back to the 167.91 to 164.16 long-term support. In fact, if you're an options trader in the IWM, you could consider, say, buying 168 out of the money puts that don't expire for at least 2 or 3 months. You know, the further out you go in time, the more expensive the options become, but the more immune you are to theta, or the time decay element, on the way down. So I'll let you make that choice. You may be a very experienced options trader, but I'm just putting that out more for the beginning to kind of mid-level traders. Anyway, 194.57, a big area. This is short setting territory, ever so cautiously. If we close above 194.57 and you get short in the vicinity, I would suggest either A, liquidating that short position or hedging it with, say, out of the money calls. Because if we do close above 194.57, I think by the end of the year, we just might recover all the way back to that 244.46 all-time high from the fourth quarter of last year. I think that was a November high, if I recall. And I will make one other point with regard to the image you see here. There's also a significant channel at 187.94. It's sort of a mid-band. And if we close back below it after having tested 194.57 this week, that is actually a confirmation of playing the sell side. So if you're getting short in this vicinity and we settle the week below 187.94, I think you should be feeling pretty good about that position, because I think possibly in as little as 3 to 5 weeks we could fall all the way back to the 167.91 to 164.16 area. If we do, I also wanted to mention, I see this chart here. There's sort of some symmetry, if you will, some synchronicity with regard to 194.57 and a long-term channel top at 195.34 that goes back 13 years. So I wanted to throw that out there as well. Mid-90s, big area. Mid-190s, rather, a big area. But if we close above 194.57, I think that's about it. I think we continue higher. Until then, this is short-setting territory. And on the way down, there's a simple channel structure at 179.43. I'm only putting this out there to let you know that I'll be watching that on a weekly basis. So if you're a near-term trader of the IWM, and let's say that we close this week below the 187.94 channel top, then the 179.43 becomes next week's target. That can contain weekly selling pressures, and I'll be updating you on these levels next week as well. Just wanted to put that out there, that this video series is well suited not only for big picture traders, but also near-term traders who position themselves for a week or two out. If we do close above the 194.57 level, I might as well continue with that because we're right at it. Then we actually have a meaningful buy signal, as I was saying. I think 244.46, not out of the question by the end of the year. And on the way up, there is a respectable 2/3 speed line at 210.14 presently. There's also Fibonacci levels on the way up and so forth and so on, and I'll be apprising you of that next week's video if we close above 194.57 this week. But if we close above 194.57, I would say we've got a 2 to 3 week objective at 210.14, and that speed line can contain at least weekly, if not monthly, buying pressures. And so there's a scenario here that I want to flesh out just a bit. Close above 194.57, 210.14 expected within 3 to 5 weeks, 2 to 3 weeks perhaps, where we could top out through September, then fall back perhaps to the channel top at 194.57, then rally back up to 210.14. That is a scenario where we could actually trade inside then that kind of widening wedge between 194.57 and 210.14 for the better part of 2 months. That is a real possibility. And then closing above 210.14 is sort of the final shoe to drop as far as line studies are concerned, trend-defining line studies. 210.14, an aggressive upside pivot point through the rest of the year. Were we to settle above 210.14, say by the end of September, I think it's very realistic that by the end of the year, we retest 244.46. I do think there's a reality to that anyway if we close this week above 194.57, FYI. But until then, this is a short setting zone, as I've been saying, and if we close the week below 187.94, it essentially confirms that dynamic, and we should then fall back to that 167.91 speed line within about 3 to 5 weeks, where once again we can bottom out through the rest of the year and turn back higher as we move into later year. Now, I will say, and I'm way ahead of myself here, but this is kind of big picture stuff. Not unless we close below that 167.91, 164.16 area, do I see this market then falling apart in a meaningful way as we move into later year. And this would be the objective. Initially, it would be the 152.29 descending channel bottom that is based in part on this week's high, and that converges in November with a long-term channel bottom at 130.95. So I think you could say that if we close below 164.16 this week, the 130.95 channel bottom becomes our end of year objective within about 3 to 5 months. And that is a significant structure of support that can contain selling not only through 2023, but quite possibly on a decade-long basis. But we're a long way from that. I'm giving you the what ifs here. I'm going to leave you with this image holding above, or below rather, the mid 190s. This market can fall back into the mid to upper 160s over the next month or two. And inversely, if we close above the mid 190s, we're once again looking for that 244 area all-time high, likely by the end of the year. And I think that pretty much covers it for this week's IWM report. Please click like. Please click subscribe. We've got a lot more material coming your way for free on YouTube, but I will always mention wickedstocks.com. We have a premium membership there, $47 a month, and you get everything. You get the Daily SPY, the Daily Triple Q, the weekly analysis in the indexes, and 2 individual stock picks a week. We did one on Microsoft, actually, on Monday. There's a lot going on that you should know about in Microsoft. So anyway, that's all I got. We'll talk soon. Have a great day.